not on a day rate kind of job like Nusantara or Seamec Anant or Seamec 2 or Paladin. So this is a lump sum job that we are taking. So to find out, okay, what is the contribution of Princess as such, individually, it will be difficult to do find out. So what we do is that for the EPC, the kind of value of the job that what we are getting, that we declare to the exchange, and that value is split over sometime over 2 seasons or one and a half season. So it will be a bit difficult for finding out or taking out the contribution of the vessel Princess individually into that job. So you need to look for that revenue which is shown as a lump sum job.
Got it, sir. Just last question is, will it be possible to just give a rough average what kind of day rate Seamec Princess generally get, so that at least I know the day is operational and I can get a rough understanding? Is that possibility? Is that possibility there?
As Naveenji said, no, this is a lump sum job. It is not on day rate. Basically, I clarified, we have two set of activities. One is IMR, which is on day rate, and other is on the subsea construction activity, which are on lump sum contracts. There, we have to perform certain scope of work based on which the billing happens. So, calculating a day rate for Seamec Princess and Seamec 3 will not be appropriate.
Got it, sir. Really sorry, just one last quick was, we are doing dry dock for Nusantara and then getting it, on the contract. But I just wanted to understand, when will the dry dock of Anant happen? When is that scheduled? What is the timeline for that, basically?
Okay, so Anant, there is no dry dock as of now because it is a new vessel. So till next 5 years almost, we do not have any issue regarding the dry dock of the vessel Anant.
Thank you so much, sir. That's it from my side, and all the best.
Yeah, thank you.
Thank you, sir. Participants can raise their hands or drop in that Q&A chat box to ask questions. Sir, actually, I received a few questions. One of the questions from our investors. Sir, we are doing vessel addition of Anant and Nusantara. So how we are going to fund those capex?
So in Bala, in case of Nusantara, we have already completed the acquisition, and this vessel we have acquired for 23 million, and we have funded it through own sources plus term loan from bank. So debt plus equity, we have funded it. And in case of Anant, we are going to do the same thing. We will be putting our money as well as the term loan, but there will be debt equity would be in the range of 50-50 sort of.
Secondly, Bala, as you would know and our investors would know, Seamec has a healthy financial and almost zero net debt. So raising some debt for the business is only healthy because we see some growth potential coming in for this year and next year. And the same debts can be repaid in next 2 to 3 years from the cash flows of the business.
Please, sir. And sir, next questions regarding our report from a third-party agency. When we can expect and what kind of when we can expect those reports and
which
what kind
report,
of action?
Bala, can you clarify which report you are mentioning?
So regarding our management fees, we have appointed advisory services for related party in that side.
So, Mr. Bala, in the already we have appointed Grant Thornton as the auditor for evaluating the related party transactions that the company has entered into, and we are happy to announce that they have completed their audit of these transactions, and we are hopeful to get a draft report submitted to us very soon, and probably before the next board meeting, that report will come to us and will be presented to the board and shared with the exchanges also.
Okay, sir. So we'll take a next question from CP Shah. Sir, you're unmuted.
Mr. Shah, you are on mute. Bala, can you unmute? Yes.
Hello, am I audible?
Yes, sir, you are loud and clear.
Yeah. So my one question was that, I mean, we have come out of the Nayavritti JV, which was in the tunnel work. I mean, is there any impairment charge that has been taken, or it is likely to be taken for coming out for the closure of this venture?
So, Mr. Shah, this JV which we have undertaken with Nayavritti, it has not performed as per our expectation. And in last financial year 24-25, we have taken the impairment of the investment which we have made into this entity.
What was the value like?
It would be in the range of around 3.67 odd crores rupee.
Okay, and that is the full. I mean, so no further impairment is expected on this venture.
No further impairment. Everything has been provided.
Okay, and going forward, are we going to pursue more opportunities in this line of business, or we are going to stick to the core business of offshore vessels and?
So, Mr. Shah, the experiment which we have done with this, it was not resulted into the expected lines. So, as of now, it is difficult to say what would be the future line of action. But as of now, we are not thinking into this direction. We are focusing more onto the core business.
Okay, that's all from my side. Thank you and wish you all the best.
Thank you, Mr. Shah.
Thank you, sir. We'll take a next question from Shaurya Punya.
Hi, am I audible?
Yes, sir, you are audible.
So just I missed one point. So what has been the acquisition cost for Nusantara and Anand? Can you repeat that?
So, in case of Nusantara, we have acquired this vessel for 23 million. And in case of Anand, expected value is 70 million.
70.
70.
70 million expected value. Okay. And in both cases, we are expecting a 17% ROCE, right?
That is right.
And sir, what kind of margins we are guiding, like 35% margins we are guiding. So what kind of revenue growth we are expecting this year and next year, if possible?
Sir, we are expecting a 10% revenue growth this year and about 10 to 12% revenue growth next year also. However, because of the better business mix, we will see higher margins and better profitability both in this year and next year.
Okay. Okay, sir. Thank you.
Thank you.
We'll take a next question from Darshan. Darshan, sir, you're unmuted.
Yeah, I'm audible.
Yes, sir.
Sir, I want to know regarding the oil. If the crude oil goes below $60 in the international market, will that any effect on the company's growth and EBITDA margins?
Okay, so
for long term, next say 2 or 3 years.
yeah, so for as we have mentioned in the initially itself, all our vessels are mostly deployed in what we call that IMR or inspection, repair, and maintenance kind of projects, and they are all most of them are tied up on long-term contract basis. So the downside is very minimal on that. And when we look at the broader perspective that if rate comes down of the oil, what is going to for our scope of work? So I would like to tell you that if price is going to come down, oil companies are not going to stop the exploration activity immediately. And even if they stop it, the one which they are pumping out the crude and all those things will still continue. So our kind of work will still continue for the next foreseeable 3 to 5 years. That is not going to be an issue. Even if price crash down to something like, let us say when COVID time that it has gone to 2025, work was still going on.
Okay, so it will not affect in the means 2 or 3 years. We are on the
in the short term, it is not going to get affected anyway.
okay, okay, sir. Thank you.
Thank you, sir.
Yeah, thank you.
Thank you, sir. We'll take a next question from Rogan Gupta. Rogan, sir, you're unmuted.
Hello. Yes,
Yes.
sir. I had one question. So the numbers don't seem to be tying up. Like, I mean, quarter one, if we look at it, you had an EBIT of 46%, right? And then we say, okay, we are going to add 135 crore of EBITDA in this year. Sorry, maybe in the next year, right, on a full year basis. So the EBITDA margin should be much higher than 35%, right, which you're guiding for.
Sir, we guide a margin which is more sustainable. Okay. There can be higher number also. I think that maybe Mr. Bala, as an analyst of this sector, can guide you much better, and you can have a discussion with him after this call on this. Bala, I think you can clear the investors with your next update.
Yeah, sure, sir.
Okay. Sir, and for both these ships, right, the two new vessels, what is the exact debt that we are taking? Like one you mentioned is 50 debt to equity. So around 300 crore, I'm assuming, is debt over there. So for the other vessel, how much would be the debt that we've taken already?
So in case of Nusantara, we have taken a debt of 150 crores and
Okay.
put 50 crores from our equity, from internal sources. And
Okay.
in case of Anand, we are proposing to acquire 300 crores of term loan left from internal sources.
Okay, understood. So this 150, when had we taken this? Like when was the drawdown? It
This
was after
happened,
March or
this happened in August 25.
August 25? Okay, so last month. So basically, we'll be adding around 450 crore of debt in this FY.
Right.
And like, what kind of cost are we borrowing at? 9%, 10%, what is it?
This is below 8.
Okay, below 8%. So just give me a minute. And these vessels, like, what is their life? 25 years, even as per the Companies Act, we depreciate them at 25 years.
So as per company's policy, we depreciate all vessels in 20 years from the date of built. So in case of Nusantara, depreciable life is left for 5 years, but useful life is left for 10 years. And in case of Anant, we will, it is a useful life for 23 years are remaining, and depreciable life is 18 years.
Okay, so Nusantara, what will be the depreciation we'll use? 5 or 10?
We will depreciate in 5
5
years.
years straight line method.
Okay, got it. So, sir, this, I mean, just an approximate calculation, right? This should add a total PBT of around 35 crore, right? These two vessels, if I calculate like,
Rohan,
wha-
Rohan, what I would suggest, Mr. Bala comes up with the numbers every quarter.
okay,
I think you can discuss these granular numbers with him for the better interest of the investors, and we can discuss more on the business side. Rest assured, the business is doing well and definitely will perform better.
okay. And sir, okay, one then last on the business side, right? Into these diving support vessels, which are the other large guys, like apart from us?
Other players.
As
Yes,
far as
more on the landscape.
as far as India is concerned, practically we are the dominant player over here. Not many companies are there which can provide the diving support vessels. So, in fact, we have one of the biggest fleet of such kind of vessel across globe also. And when we go outside India, there are companies which are having one vessel, two vessels, something like that. So they are all spread all across the globe. but none of the companies having this kind of fleet.
Okay, even at the global level, you're saying there are no companies with this
Yeah,
fleet.
yeah. With this kind of fleet size, none of the companies are there.
But why? Like, what is the reason? What is so you can say, is there some, entry barrier or something that you can highlight over here?
Yeah, so entry barrier is definitely there, because if you look at the price of a new vessel, it can go up to 150 million also. So there are definitely price barriers are there, because these are highly capital intensive projects. So that's why not many companies are keen to enter into this space.
Okay, okay. Okay. Okay, sir, got it. Thank you so much.
Thank you.
Mr. Bala, can I get your number or can you drop it in the chat box so I can contact you?
I think on the research report published by Mr. Bala, you will have these numbers.
Okay, fine. Thanks.
Thank you.
Thank you, sir. We'll take a next question from Kunal. Sir, you're unmuted.
Hello, am I audible?
Yes, Kunal, good afternoon.
Good afternoon, sir. My question was for your IMR vessels. What is the typical contract length?
So normally these contracts are from 3 to 5 year duration.
And what is the maturity profile like? Like how many are coming up for renegotiation in the next year, 2 year, 3 years?
So these are different vessels contracted at different point of time. So maybe every year or every two, one vessel goes into renewal, then tender comes up and it gets renewed. So one contract will be getting over at the end of the next year. Then there will be some more coming up in 28, 29. So there are different time periods are there.
Okay, so most will come up after 28, 29.
Yeah.
In 28, 29.
Yeah.
Okay. And what do you think about the rates currently prevailing in the market? Do you think the market is tight, or do you think there is enough supply?
See, market is tight for these vessels. So what we have experienced over the last so many years during the renewal, where there is some kind of repricing always takes place, and some better pricing comes up. So this is what the experience for the last so many years are there.
Since when has this uptrend been going on?
These are from last 5 to 7 years. It is like this only.
Okay. And compared to, say, the last 20 years, where will you place the current market in terms of how tight it might be, or where the rates might be?
See, last 20 years, definitely there is an uptick in the prices, and but we cannot compare it in that way, because it is such a big period that we are talking about. That whole dynamics has changed during this period. So that number also got that number of vessels which were available 20 years, they have in fact come down, and there are less number of DSVs available now.
Kunal, secondly, see, these are long-term contracts and strategic contracts. So these cannot be viewed on short-term basis, where there is a principal engagement with the vessel owner and the oil field to maintain the asset integrity. See, the rate is fixed for 3 to 5 years, while there is always a cost inflation that goes up in those 3 to 5 years. So whenever the renewal comes up, this is the cost index and this is the market conditions. Generally, we are able to secure price rise.
And that's why I was asking for where would you place the current rates in terms of the last 20 years, because
that's what I'm saying. See, the rates are increasing year on year. Okay. But there are different kind of contract. There are different scope of contracts. So averaging them out will not be possible for us. But if you see, we are confident that the rates are strong, and we believe that they will remain strong. And therefore, we have added these two fleets to the Seamec scope.
In fact, the rates in the Indian markets as compared to the global are still quite low. Global market rates are quite high as compared to the rates that are offered by the Indian major oil companies like ONGC and Oil India and Vedanta and L&T. So that way, because our major chunk of business still is in India only, so we are on a very strong footing in terms of the stability of the rates, and we do not, foresee these rates going down in the next 4 to 5 years.
And would you have numbers on new supply coming into the market? Maybe the order book of the major builder.
New supply in what sense?
Vessels.
In IMR vessels.
No, we are not envisaging any kind of disruption into that, because as I told you, there are very high entry barrier. So it is not that vessel like this can be made or comes available at short notice. And building a new vessel itself take almost like 3 to 4 years. So what we have analyzed in the market, there is not going to be much supply coming in to soften the prices.
At least for the next 4 to 5 years.
Yeah.
Thank you very much, sir.
Yeah,
Thank you.
Thank you, sir. We'll take a next question from Mankara. Sir, you are unmuted.
Am I audible?
Yes, sir, you are audible.
So my question is, we have around 333 crores of treasury on our books and 140 crores of cash. And this year we are looking to do pretty good utilization, and hence we might have good realizations as well. So despite this, we are looking at raising huge debt and equity. So anything on that?
As Vinayji just said, no, in the next vessel, there will be a 50-50 split. So definitely the treasury and the reserve will be utilized to fund the acquisition of the vessel.
Oh, okay, sir. So my next question is, when can we expect Seamec Glorious to be deployed, and at what day rate?
So Seamec Glorious, as usual, it is going to get deployed sometime in end of October or early November. We need to wait for the exchange filing on that. And this is also going to be coming at rate which is benchmark to the market.
We got it, sir. So when can we expect Seamec Palladium to go for dry dock, at any dry dock scheduled for FY27?
So Paladin is likely to go for dry dock sometime January 26.
Okay, sir. Any dry dock scheduled for FY27?
So there are different vessels are there. So for the financial year 27, we will be having around 2 vessels for the dry dock, and we will see what best can be done on that.
Got it, sir. So my last question is, if you are able to maintain a similar operational mix and efficiency factor of 90% that we achieved in Q1, so going forward, can we have a similar EBITDA margin what we achieved in Q1?
See, we cannot comment on quarterly margins. As we said, different vessels perform different type of contracts under different weather conditions. But if you see on a blended basis, we have guided that we will be doing 35% plus margins, and we would definitely like to beat that.
Okay, so sir, but if we are able to utilize our ships 90% on efficiency ratio, then surely we might be able to do better than 35, right?
Sure.
Yeah, absolutely.
Sure.
See, but we need to also factor in that there is seasonality of the work is there. So during this monsoon period, vessel will be idle. So that's why we always say that the better way to look at our number is on the annual basis, not on the quarterly basis.
Okay, sir. Thank you for your answers.
Thank you.
Thank you, sir. We'll take a next question from Shaurya. Sir, you're unmuted.
Hi, I already asked my question.
Okay.
Thank you. Participants can raise their hands or drop in that Q&A chat box. We'll take a next question from Rohan Gupta. Sir, you're unmuted.
Hello.
Yes.
Yeah, sir, I just wanted to understand one thing. So, like, we have these three vessels, Seamec 2, Seamec 3, and Seamec Princess. So, what is the status around these vessels? Like, these are pretty old, right? They are 30 or plus old vessels. So, when will we be, say, retiring these vessels or?
So, as you rightly said, that these three vessels are pretty old, and the company has got a very good a plan for all these vessels. We continue to look for opportunities to acquire new vessels and to revamp our fleet. So, right now these vessels are old, but these vessels continue to perform as these are being maintained properly and these are following all the statutory guidelines. So, even if the age is there, but still there is no issue that we are facing on the basis for the performance of the vessel. But we are definitely mindful of the age, and we will be. That's why we have activated this fleet revamping plan, where we are adding new vessels, and these vessels will be phased over a period of time to ensure that these vessels have lived their life usefully, and there is
So
no.
generally, what would be the life? Like, these are 40-year, if I see the built year, right? So 40-year-old vessels. So till
Yeah.
when, or maybe some detailed plan around till when we plan to run these, and how much are these three as a total contributing to our revenue as
Yeah.
of now?
So for the life, as I told you, we continue to follow the statutory guidelines for maintenance of these vessels. So there is no bar that these vessels cannot work beyond that certain age as of now. So we are for maintaining these vessels as per the guidelines. So, but definitely there is a plan to phase out these vessels over a period of time, but that will be done to ensure that there is no not much of the effect on the company's business or the revenue or the numbers. So these will be phased out gradually.
Okay, and sir, how much would these be contributing to our revenue in percentage terms?
Will be contribute. See, as again I said, the numbers will vary. So basis March 25, that will be about 45%. But March 26, because Swordfish has been deployed and next year it will be deployed fully and Anant and Nusat Tara will come, probably their contribution will come down to 25-30%. And
Okay.
secondly, also it is important to note here, while IMR contracts work on higher margins, Seamec 3 and Seamec Princess work on EPC contracts, lump sum contracts that Naveenji mentioned, which are tentatively about 10 to 12% margin business.
Acha, okay. So basically, you're saying overall the margin on these vessels was on a lower side, right, in FY25?
Of the two vessels, Seamec 3 and Seamec Princess, Seamec 2 continues to operate on IMR, which is on a day rate basis and work on a normal margin business.
Okay, understood. Okay, so that helps a lot. And final question, we had recently given a filing of this $3.14 million contract or addendum to a current contract. So, like I see, historically, you had a 85 crore sort of top line in Q2 every year. So, will this 35 crore of additional revenue, like, will it mean additional to 85, or is it
No,
like always every year?
no, this is a new work that will be executed by CMEC Princess. So over the next few quarters.
Oh, okay. It will be over the next few quarters. Okay, sir, got it. Okay, sir. Thank you so much. All the best.
Thank you.
Thank you, sir. Sir, due to time constraints, we'll take a last question from Mankar Rao. Sir, you're unmuted.
Yeah. Sir, actually, I wanted to understand that CMAC Palladian, CMAC Anant, and CMAC Nusantara, three of these DSVs, we have a day rate of 35,000, whereas Swordfish is almost 80,000 because of it being deployed outside India. So, in the coming years, is there any potential, of course, Palladian is also going to expire, that we deploy them outside India, and there is a scope of, the day rate going from, 35, and we can see 80,000 for CMAC? Swordfish. So, is there any such possibilities of such repricing in our contract in the coming 3 to 5 years?
Yeah, the possibility of repricing is always there, as we told. As and when this contract gets over, these will be positioned depending upon the market dynamics at that point of time. So if there are suitable opportunities coming for deploying this vessel outside India at higher price, definitely that will be the priority for the company.
Okay. Just to understand, sir, is the demand that way as of now? You're seeing that there are enough opportunities outside India because we have slightly gone active that side. So as on today, the market dynamics, do you see this possibility?
Yeah, definitely the possibilities are there. So that's why we continue to look for good opportunity to acquire the vessel so that we can put some vessels over outside India also.
Got it. So second is a slightly strategic question is my understanding is today if we buy a new vessel, the ROCs don't make sense and the old vessels also are at a pretty high cost. So HAL, which is our parent company, is helping us, take these vessels in our book. So I just wanted to understand that the strategic direction which we have taken. So how many such more vessels are still there on HAL or our parent company's book where there is a possibility of that being transferred and consolidated in Seamec in the coming years?
See, there was this only one Seamec Anant, which was their last vessel, and Nusantara we have acquired from outside India, and going forward also we are looking forward to acquire from third party only. Secondly, as you said, see, these vessels are on long duration contracts and have a long gestation period. As Navinji said, the capex cost is very high. Looking such contracts on a very short period time, they may not make economic sense. But like we acquired Swordfish for how much? $20 million. $24 million. And we are doing that kind of number now every year, 2-year basis. Okay. So going forward, what will happen that we as a business management understand how the markets behave. Basis that only we take our capex call.
And also, Swordfish is still a 2-year contract and Anant is a 5-year contract. So, you have to take into fact that you get a complete business for next 5 years without interruption, or you take a business of 2 years and then you search for another opportunity, and during that there might be a gap when the vessel is non-operational. When you work out the averages all over, I don't think we really have much of the scope there. But definitely, yes, Swordfish has been deployed only recently, and Anand's contract, has been done almost a year before. So we understand that once these periods are over, we will be doing better rates next time.
Sir, just one last question from my side is basically we are telling that we might take half debt and half equity. So both Nusantara and Ananta together about 800 CR of acquisition cost. And then as alluded by the previous participant that there is good amount of treasuries and cash in our book as well. But the third caveat here is also that we are looking to, give some equity stake to HAL and there is a certain dilution which is also going to happen. So I just wanted to understand that is this also happening and what kind of equity where the dilution will increase, because as of now with this half debt and the money we have on our books doesn't look like this thing would be required. So just wanted your thoughts on this.
Definitely you're right. So as of now we want to fund the vessel from internal accruals and liquidation of our investments, and the inclusion of equity from HAL may not be required.
Got it, sir. Thank you so much and wishing you all the very best.
Thank you very much.
Thank you, sir. Due to time constraint, this is the last question. I would like to thank the Seamec management and the participants for participating in the Bharat Connect conference. And sir, any final closing remarks from your side?
Thank you, Mr. Bala. Thank you, Aryan, for hosting us for this conference. And we would like to thank all the participants for taking out time and coming to the conference. You may reach out to Aryan Capital for any subsequent questions on the financials that you may have. And management is always available on quarterly calls for any further discussion. Thank you very much.
Thank you, everyone. We are closing the session.
Recording.